This is FLWS 1-800-Flowers. Paul, you are sending flowers as an apology a lot.
Oh, yeah, a ton. And just to random people, too. I'm just like, listen, hi, I probably offended you at some point.
Here's some flowers.
Or I'll offend you in the future.
Yeah, that's a great...
Yes, I either have offended you or I will offend you in the future. Here are some flowers.
And it might very well be during this show.
Yeah,
so
here's an autograph picture of me going like this.
Okay, let's do it. What is the market cap for 1-800-Flowers?
By the way, can I make a comment? I have used 1-800-Flowers, and they make it very easy. So that's my personal endorsement.
You really have used that, of course. I knew that. Yeah, of course. Go ahead.
$1.7 billion market cap.
Wow, okay.
PE, 16.4. Check mark there.
Wow.
Profit margin, only 5.6% X. Now remember, guys, I have talked about this. I will probably be changing the first 2 pillars of our 8-pillar analysis to something else. Because as you guys see, I don't really pay attention to the PE. And the profit margins just depends on too many businesses. So either way, no dividend here on the company. In the last 12 months, they've had $250 million in free cash flow. So off the bat right now, I immediately draw my attention to, holy cow, $1.7 billion company, $250 million in free cash flow. What is that? 7 to 1? That's 7 to 1.
So guys, Paul asked for, I never know if Paul's asking rhetorical or actual. So he'll ask some crazy calculation and look over at me and I'm just like, hell no.
Crazy calculation? It was $1.7 billion divided by 250.
When you don't hear it.
It's 7, oh, that's right, you didn't hear it. So the price to free cash flow in the last 12 months is 7. That immediately gets my attention no matter what. I'm going to be like, okay, I need to go look further into this company. And it's not matching the PE, but that's okay. Let's go figure out why that is.
Okay, so we have a check and an X. Let's do revenue growth over the past 5 years. Is pillar number 3.
Okay, revenue growth. Oh my God. 900 million, 1.6 billion. So obviously in 2020, a lot of people were apologizing for a lot of things in 2020.
That's because they had to live with their significant other for months on end.
I thought you were going to say something else more morbid, that people were just buying it because of condolences.
That's a good one, though.
Llewellyn is correct. Make sure we're tickling that thumbs up. Now, Paul, step aside and show people these beautiful baby shorts and those gym.
I love these shorts. These are bamboo.
Legs.
You guys like my skater shoes?
I
bought like 4 pair of these. I love skater shoes.
I could have swore I saw an engulfing candle coming out the front of that. But okay, let's go to, so great revenue growth. That's incredible. How about profit is pillar number 4, baby cakes?
Profit. Okay, guys. 27 million to 104 million. Now I'm starting to understand why the trailing 12 months free cash flow ratio is 7. They had a monster year last year. The hardest part about companies that had a monster year last year because of COVID shutdown, do I think that they're going to go back to low numbers? No. But do I think it'll be a blend somewhere in the middle? Yes. I don't think people are going to permanently use this. So part of your conservative approach is to not give full value for the previous year's cash flow or profit. I do believe that. So, shares outstanding.
Shares outstanding is pillar number 5. I'm sorry.
Down about 1%, so it's a check mark there.
Check mark for shares. How about current assets over current liabilities?
275 million in current assets, 233 million in current liabilities, and liabilities total of 543. So I like this. It's pretty solid.
So we have all checks besides profit margin?
Correct.
Okay. Pillar number 7 is free cash flow growth.
Free cash flow. And luckily, because you have the Everything Money software, it's going to give you the free cash flow number without you having to calculate it yourself. Because if you're like Seth and your head blows up whenever you have to use a calculator to type in 3 digits at a time.
Again, we're looking at 1-800-Flowers. This is ticker symbol FLWS. Go ahead, Paul, with that free cash flow growth.
So we went from 193 million to 254 million. So look at this. Why did it have 100? That's a big year there, too. All right, Seth, you ready for the other 3 numbers?
Go ahead.
36, 47, 69.
That was it? Wow. Okay. Yeah. Divided by 5. The average free cash flow is 120, Paul.
All right, so guys, this is what we have to discuss here. 120 million. The company's 1.7 billion.
Look at
for the last 5 years, the ratio 1.7 billion times 120 million is 14.6 or something. I don't know. What's the number? Something like that, 14.6, 14.7, whatever the number is. It's not bad, it's a check mark. But the question, as part of your being a smarter investor now, is to sit there and say, why are there such big fluctuations in free cash flow? Look at the previous 5 years to that. 4 years to that. These are fluctuations, and that's why we take longer periods of time when we look at numbers like this, because anything can, okay, what was said?
It's not about you. It's about Seth.
Here and there.
He cut to blank stare.
We just have so many great fans. Like, listen, you know damn well that like
They notice such detail.
they notice the detail when I'm standing here looking like a freaking idiot, and then Don keeps the camera on me, and I'm picking my nose or like looking at you like, what in the hell are we even talking about? And then somebody in the chat's like, by the way, what company is this? I'm just like, how do I tie all this together? So yes, I was standing there like an idiot when you asked me questions, and Don quickly cuts it. I'm like, I don't freaking know. You're doing the math. I love you. You know I love you.
I love you.
Go
It's
ahead,
like my
Paul.
mother.
Go
Okay,
on with your thoughts. So.
The questions you need to be asking is why for the inconsistent cash flow? I think we could explain last year, people are going to be buying online way more. So I look at that saying this is fine. But the previous years, would I take 120 as the average? I don't know. That's the hard part. You have to decide what your real average is. Do you go back 10 years? I mean, look at here's the thing. Their revenue in this 2016 was half of last year, and yet their free cash flow wasn't double. So you just gotta, I don't know, these are the questions you need to be asking. Do I like it though? I like 1-800-Flowers. I liked it a while back. I looked at it a while back. If you think online buying is gonna be going even higher for flowers like that, make sure you're paying the right price, but I don't see how this is
Gonna go away?
I mean, to be honest with you, I think to myself, Amazon buys them. I immediately think to myself, Amazon buys them.
You've said this before because like some of these food deliverable companies that are worth, $2-3 billion, you're saying it's just dropping a bucket toward Amazon.
Well, yeah, look at Amazon going for $1.7 billion, they could own a great brand name. I mean, who knows? If you ask me right now, Paul, where would you buy flowers from online? What am I going to say?
Flowers.
I was going to say, I don't even know where to buy flowers in real life. I mean, I have to Google it, drive around town.
And when you Google it, what's the first thing you're going to find?
100
flowers.
I see 100 flowers.
And they're going to have same-day delivery at some point.
I
So
see.
I'm looking at going...
They have next day delivery.
They have next day delivery for like $15 extra.
Yeah, I actually did a next.
Trust me, it depends on how mad you made the person for how fast you get the flowers there.
I see, of course.
That's true.
Why don't we head over to
$50 if you have to.
Let's head over to Dr. Momentum with the Bid and Ask Nation and the Everything Minions about 1-800-Flowers, ticker symbol Don. Put a ticker symbol up in the top left, and people are loving that, Don. The FLWS, 1-800-Flowers. Go ahead.
So,
go ahead, Mo.
I'm glad we're doing this one because this is explained. I talked about snapbacks this morning, and I could emphasize it again. So back in this time frame, January, you turned into a short and you moved right through the sweet spot, could have shorted this all the way down. Now, you're in the oversold region, but your red line is still under your yellow. So you're still a good short. You see the last couple days, the price is increasing on you. This is what separates good traders from bad traders. You would look at it and say, oh my God, I'm getting killed on the price. I need to get out of this thing. But if you look at your trend, you have beautiful trends still going down. This is what separates good traders from bad traders. If you are short on this, stay in your stock. If you want to, you can kind of reduce your shares on it. But when you see snapbacks, it's not a time to get out. It's a time to recognize that you're getting a good pattern that's going up on you. You're creating that M formation that I talk about. And now you can come down and break this previous low. And that's where you can keep making your money. Also, your bid and ask is 4 cents.
You know damn well we love that bid and ask. Paul, final take on 1-800-Flowers.
I say pay attention to it. If you like it and you think, if you do more research and think their growth is going to sustain here, and this new level is probably a permanent level, I don't see how you're going to go wrong on this one. I think it's a reasonable company, reasonable price. Now, as a value investor, am I buying it a lot lower? Of course, I'm going to buy it a lot lower. But I don't think it's I don't look at the numbers and go, oh, this sucks. I look at the numbers going, okay. And I do think that a company like Amazon or a company like Walmart or somebody who's trying to really own some sort of space to get people to would be buying this company, especially at $1.7 billion. That's literally a drop in the bucket for Amazon.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.